Hello traders, it's Tuesday, October of 31st. This is Alan Hong, market analyst of MY-GKFXPrime. So we're gonna share my daily analysis through this video. And first of all, let's review the major market movements. So first instruments we're referring here is dollar index info hourly charts. So the US dollar was fell against a basket of major currencies, down 0.28% to 94.44 after data showed inflation remained subdued ahead of the Federal Reserve two-day policy meeting slated for Tuesday. So fresh on the heels of posting its best weekly gains of 2017, the dollar came under pressures after investors milled over a duo of reports showing inflation continued to shuttle, while consumer spending notched its biggest monthly increase since August 2009. So the Federal Reserve preferred inflation measures. The personal consumption expenditures price index, excluding food and energy, rose 1.3% in the 12 months through September. That was in line with expectations but well below the Federal Reserve 2% target, and this was filling the expectations that the trend of subdued inflation will keep interest rate lower for longer. So consumer spending, which accounts for more than 2/3 of US economic activity, jumped 1% last month, which according to the Commerce Department said on Monday. And the duo of reports comes amid ongoing speculations concerning President Donald Trump's choice of candidates to replace Janet Yellen as head of the US Central Bank. So President Donald Trump is likely to pick Federal Reserve Governor Jerome Powell to replace current Federal Reserve Chair Janet Yellen, and this was reported by Reuters on Monday, and this was citing a source familiar with the matters. And Trump is expected to announce his choice on Thursday, prior to his five-nation trip to the Asia-Pacific region as the US seeks to curb North Korea's growing nuclear threat. And the tumble in the dollars, however, is not expected to continue as data show that traders abandoned some of their bearish bets on the greenback. The values of the dollar net short position was 8.02 billion in the week ended October 24, down from net shorts of 12.65 billion the previous week. This is according to the data from the Commodity Futures Trading Commission's data released on Friday. While the pound rose against the dollar on Monday, up 0.46% to 1.3192 as investors wait for the Bank of England rate hike decision later in the week, and markets expect the Bank of England to raise interest rate by 25 basis points on Thursday. And the euro was also up, with the pair EUR-USD trading at 1.1624, up 0.14% as political uncertainty around Catalonia independence was eased. So the region declared independence on Friday as Madrid took direct control of the region. The yen was paired the earlier gains in Asia on Tuesday, with USD JPY dropped 0.01% to 113.17 as the Japanese central bank showed that reaching sustained 2% inflation remains years away even in the face of aggressive monetary policy easing. So the Bank of Japan on Tuesday held its asset purchase at 80 trillion yen annually as expected, with the short-term interest rate maintained at 0.1%. So the Bank of Japan also kept its core inflation forecast at 1.8%, unchanged from July as it reiterated its view on the economy that raised a balance. So early in Japan's household spending for September rose 0.4% on month, beating the 0.1% gain seen, and at a 0.3% decline on year, missing the 0.7% gain expected. As well, industrial production fell 1.1% on month provisionally, less than the 1.5% decline since, and the unemployment rate in Japan was steady at 2.8%. Having a tad in commodities markets, gold price was found in Asia on Tuesday. It fell 0.07% to traded around $1,276.78 a troy ounce. as China showed a dip in the key PMI survey, raising questions about demand prospect as non-manufacturing also fell. So China reported the official manufacturing purchasing manager index for October at 51.6, compared with a level of 52 expected, and its non-manufacturing survey at 54.3 after 55.4 in the previous month. And overnight, gold prices rebounded from session lows as the dollar came under pressures after data showing inflation continued to startle, amid growing speculation that President Donald Trump is likely to pay Federal Reserve Governor Jerome Powell to replace current Federal Reserve Chair Janet Yellen. So gold prices stayed ahead of the Federal Reserve two-day policy meeting, which get underway on Tuesday after data show inflation remains subdued while consumer spending grew at its fastest rate in more than 8 years. Gold prices are sensitive to move higher in both bond yields and the US dollars. A higher dollar makes gold more expensive for holders of foreign currencies, while higher US rates leave the opportunity cost of holding non-yielding assets such as bullion. So gold prices have dropped for 2 straight weeks as traders continue to unwind their bullish bets on precious metals amid a rebound in the dollar and growing expectation that global central banks will continue to tighten monetary policies. So according to a report from the Commodity Futures Trading Commission (CFTC) on Friday, the net bullish bets on gold was fell to 191,400. As for the oil price, it was narrowly mixed in Asia on Tuesday, with the West Texas Intermediate crude price fell 0.18% to trade at around $54.05 a barrel as China demand gained attention on a weaker than expected PMI readings. So later on Tuesday, the American Petroleum Institute (API) will report its weekly estimates of crude and refined product stocks, and let's see a 2.575 million barrels drop in crude and 2.45 million barrels decline in distillates and 2.05 million barrels dip in gasoline supplies. So the estimates are followed by official data from the Energy Information Administration on Wednesdays. So crude oil prices settled higher on Monday as concerns over an uptick in Iraq exports were offset by ongoing speculation that OPEC will agree to extend output cut agreements. So OPEC Secretary General Mohammed Bakindo said Russian-Saudi backing for an extension cleared the fog ahead of the group's meeting in Vienna on November 30. So Bakindo's comments came just a few days after Saudi Prince Mohammed bin Salman told Reuters on Thursday the kingdom would support extending output cuts in order to rid the market of excess supplies. So in May, OPEC producers agreed to extend production cuts for a period of 9 months until March, but stuck to production cuts of 1.2 million barrels per day agreed in November last year. So growing expectation that OPEC will continue to comply with output cuts has forced analysts to leave their focus on oil prices amid signs that the OPEC-led deal to cut output is narrowing the gap between demand and supply. So JP Morgan raised its 2018 Brent and West Texas Intermediate forecast by $11 and $11.40 to $58 and $54.63 per barrel respectively. So investor concerns over a potential update in global supply, however, was kept gains in oil prices after Iraq softened, ports ramped up export capacity by 900,000 barrels per day to 4.6 million barrels per day. So now we're gonna review the highlighted economic data that released on yesterday, Monday, as well as today focused data and events. So yesterday, Monday, Japan has released its retail sales for September at 2.2% growth, which is disappointed when comparing to the focus of 2.5% growth. During European trading hours, Germany has released its retail sales as well, and it is for September's result at 0.5%, which is disappointed comparing to the focus of 0.7% growth as well. So during North American trading hours, US has released the core PCE price index, which is personal consumption expenditures price index for September, and it is just met the focus as 1.3%. So as for today, in Asia hours, China has released the manufacturing purchasing manager index for October, which at 51.6, alright, which is slightly lower than the expectations of 52. So during European trading hours, the EU is going to release its consumer price index for October, and which expected to remain the same at 1.5% growth. So besides that, Canada and United States is going to release the August gross domestic products for Canada, and consumer confidence for the October from United States tonight during the North American trading hours. Let's moving on to technical analysis sessions. So first, instruments referring to Great British Pound against the US dollar in 4-hourly charts. So the pound was rose against the dollars on Mondays as investors wait for the Bank of England rate hike decisions later in the week. And the pair GBP USD was closed above the resistance level of 1.318 but remained in a downtrend structures. So it is suggested to rebound further and could move towards the next resistance level at 1.326. On the downside, only with a closure lower than the previous low at 1.302 will open up a door for continuations of downtrends and fall further towards the next support level at 1.297. While the single currency was ticked higher as political uncertainty around Catalonia independence eased. So against the dollar, it was rebound from the support level of 1.16 and currently struggling near to 1.165. So closing above 1.167 of resistance level is suggesting for further retracement and could move higher in short terms. And on the downside, closing below 1.16 again will signaling for continuations of downtrends and could fall further towards the next support level at 1.149 as its long-term target. The yen was paying earlier gains in Asia on Tuesday as the Japanese central bank showed that reaching sustained 2% inflation remains years away even in the face of aggressive monetary policy easings. Thus, dollar continued traded lower against the yen, with USD JPY pair fell to the level near to the Fibonacci retracement level of 50 at 112.9. So closing below this level might lead to shifting trend directions and could fall further towards the next support level at 112.7. And on the upside, we could refer 113.2 as its nearest resistance level. As for commodities, gold price was found in Asia on Tuesday as China saw a dip in the key purchasing manager index, so raising questions about demand prospect as non-manufacturing also fell. So looking into 4-hourly charts, the precious metal was held steady after a little dip in the morning, but however it remained traded in downtrend structure as the both moving average lines continue pointing downwards. Thus we could looking forward for a closure below the previous low at $1,260, which was suggesting for continuations of downtrends and fall further towards the next support level at $1,237. So on the upside, the first resistance level comes in at $1,283. And the oil price were traded narrowly in Asia on Tuesdays as China demand gained attentions and on a weaker than expected PMI readings. So it currently testing on the previous heights as $54 a barrel, and closing above this level could lead further upside and move further higher towards the next resistance level at $57.20 as a long-term target. So as for the downside, the nearest support level can be seen at $53.70 a barrel. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.